Caught me mid-sip. Hey, folks. Welcome. Welcome to the 30-Minute Chart Club. For those folks that are watching this on the replay, lost my mouse. Okay. For those folks watching this on the replay, there is a link below if you want to join in on the live stream. We keep this private to keep it small and to have serious traders that want to engage in conversation. I would really encourage anybody that's on right now, if you have a question, pause me, ask me the question. I want you to get value out of this session. Now, what we're going to be doing here today is going over the 30-minute charts of roughly 30 stocks that are liquid. You could trade options on them if you have a small account. Well, you could use options to trade these stocks. Some of them are in the $500 range, but they're affordable given that you can trade options. And some say that trading options is very, very risky. Well, everything is risky in the equity markets. And I would argue that if you're buying options and you're buying them right, meaning you're not buying them too close to the expiration date where your risk of time decay is very, very high. Well, it's a very defined risk trade where you know exactly how much you're going to lose when you enter the trade, right? So if you buy a call option for, say, $1,000, you know going in, max I can lose is $1,000. How many times have you promised yourself you're going to buy a stock, you're going to stop out and lose X amount of dollars or use this as my stop loss point, only a week, 2 weeks down the road, that trade has now turned into an investment that is losing you well more than $1,000. So hope you take my point for what it's worth. And there are different strategies that we employ. I'm a big believer in the bear put spread or bull put spread, meaning you simultaneously buy a in the money option while at the same time you sell a deep out of the money option that helps finance the trade. And you do not want to buy options that are 50 days or less near to expiration. Why? Time decay at 45 days begins to really ramp up aggressively. I'll go out, like we closed out an option trade on the triple Qs. We were in July. So the time decay was literally pennies on the day to hold that trade. And I was controlling an ETF at around $290, and it was costing me nothing. We profited very, very well. I didn't tie up a bunch of capital in it, and I had a very, very defined risk. I knew exactly how much I was going to lose if the market went against me. I didn't stop out. So if you're watching this on the replay, this is the link you'll find below. Scroll down, enter your email address. We hate spam too. You will not be spammed. And join the 30-Minute Chart Club and join us in future conversations. Let's see if we have any comments. We'll start the session off with saying hello to people. Small group. Pedro. Hey, Pedro. Good to see you again. Oh, I'm not sharing my screen. I just caught that. I am notorious for not having my microphone plugged in and not sharing my screen. So always bear with me. This is the page you'll find down below if you're watching this on the replay. And also, we get spammers on our live streams that are open on YouTube. And also, we're building our email list here because YouTube has what do you call it? Not banned, demonetized several of my videos, and that didn't sit well with me. So we need to build our email list just in case they decide, you know what, we're going to cut him off like they've done so many other people. I can always reach out and tell you, hey, I'm on Rumble or on Twitter, whatever. So please like, subscribe, and members, before we get into it, don't forget, in the members area, we have the week ahead commentary strategy session. That's where we go over the closing price action of the major averages last week, and I go into our strategy for the new trading week. So please check it out before Monday morning. Okay, let's get to it. I am sharing my screen. I have audio. We're good to go. So what we want to do always always and without exception. Before we go into these charts, and I haven't done this and it's my bad, is always identify what is our sentiment of the market? What are the higher level charts, meaning monthly chart, weekly chart, daily charts telling us, and even 4-hour charts telling us about the equity market? And should we, when we execute on these 30-minute charts, should we be looking at more bearish trades or more bullish trades? If we have a market that's in a strong uptrend on a weekly and daily time frame, 4-hour chart looks good, well then we will then want to put our bias towards looking for long opportunities. So question from Dane. Quick question. In your members area, are you live trading? Well, what we will do is in the members area, no. That's a blog. It's not a blog. It's a Slack forum where we communicate about the market conditions. We share information, and I place my options trades in the Slack forum. Stock trades, whether I short or go long, that's in the members area, separate from the options trades. What I will do is at times when I see something interesting setting up as a day trade, or if it's a trade I want to put on, we'll go live and I'll put that trade on live, or I'll talk about that trade live. What am I looking at and why I like it? So that's what we'll normally do. I'm not a day trader per se, so I know a lot of day trading services do that. We're more swing traders. I like to talk about the setup and why we like it, and that way the members understand why we're getting into it. We'll talk about it later in the evening after we execute it on Market Wrap. That comes out every night, and we go over the markets. We talk about our positions and watch stocks. So we're a little bit different in that I'm not a day trader, so I can't spend all day long, talking about individual trades. So we're more swing traders, multi-day to multi-week, hell to even multi-month. We have core positions as well. So we're a little bit different than the day trading firms. But thank you for the question, Dane. So let's talk about the macro view. What are we looking at on the market? Well, last week we went into the week bearish on the market. We were short of Tesla. We were short of the Qs. We were short of what else? Netflix. And we booked our profits on Netflix and the Qs on Thursday. And on Friday, we rolled down. We had a naked call position on Tesla, rolled down very aggressively because I think Tesla is going to probably weaken up here. So I still have a short position using the SQQQ of the Qs. So this market last week had a technical breakdown, very, very significant. Let's talk about it because this sets the stage for what we're looking at this coming week. So monthly chart of the Qs. Now, remember, we only have a couple of trading days left to go. So this is significant. We have broken down below key support at around 299, 298 per share. We are currently holding the breakout point. We haven't failed yet. Another way to look at this chart is the one I went over with members earlier, and that's this way. We're in a bear flag setup. We attempted a breakout above that 299 mark, 298 mark, rejection. So what we need to do is modify this here a bit and understand that if in fact the Qs and the S&P 500 close out the month out where they closed or lower, that means some trouble for the equity markets. Now, when we do a deeper dive into the weekly chart of the Qs, we broke not one support level, but two support levels. So going back to the monthly chart, I want you to keep in mind this breakdown point at 298 on the triple Qs, because here's what I think is going to happen. Daily chart Qs. Our momentum indicators are telling us that we're quote unquote oversold. Does that mean you go in buying with reckless abandon the triple Qs on Monday morning? No, definitely not. They could stay oversold just as they could stay overbought. This is just telling us, do we really want to put on a new short position right now? No, we're good here. We have a lot of liquidity. We have a lot of capital on the sidelines looking to put it to work. Now, the daily chart of the Qs is showing us that what we did is we gapped down on Friday, and this is what you call a doji star formation. It's a sign of indecision, meaning that this trend, which has been down since February the 2nd, may get challenged. Watch this. Case in point. Here's a better way to illustrate it. So at current, we're in a downtrend channel. And it's widening out. So if they move this market lower on Monday morning, I would be looking to buy the Qs or whatever we're looking to trade, whatever chart looks good on a 30-minute setup, looking at the 286 mark on the triple Qs, expecting a counter trend move. So while on a macro view, meaning weekly, monthly view, we've had a breakdown in the markets, I think we're going to get a rally in the coming days, a short covering rally. Will it last? I doubt it, but that sets the stage for a short covering rally that we want to be involved with. So right now, going into this commentary today, we're going to talk about getting long of individual names, unless there's a setup so enticing that we want to get short. But by and large, I think that we are too close to support levels to initiate new shorts. So let's get to it. Let's begin with Airbnb. These are all 30-minute charts. Airbnb is in a downtrend channel. It's attractive. And it broke out of this 30-minute downtrend channel on Friday. So this is one that is interesting to us, and we may be looking to put on a long trade here. Now, what we're going to do, especially if you watch this on the replay and you're not understanding what we're doing, what we're going to be doing is selecting four stocks to track. The last week we had, the last meeting we had was Adobe we put on. That went up. Apple went up, I believe. I think Qualcomm went up as well, but Avago did not. I think we got that one wrong. But we didn't trade these. We were looking for support levels to get hit. So it's not as if we were saying, okay, tomorrow let's get long of these. We're waiting for support levels to get hit. Some hit support levels, some did not hit support levels. And we didn't trade any of them. But we're certainly going to be looking to this coming week because I've been more bearish than bullish. So Airbnb is one that I'm going to take a note of and say, okay, you know what? We may want to set up some alerts here on Airbnb. Adobe, this was on our watch list from last week. It did not do well. We met last on the 21st. You know, technically it did move up higher. We did get it right, but by the end of the week it had faded. So if we carried this overnight on Thursday, we would have been hit with a loss. But we didn't get into the trade, so we didn't profit, we didn't lose. So I'm not liking this. I think that Adobe is breaking down further. Big volume into the close on Friday, where you saw buying in the equity markets, the overall indexes. I mean, take a look at Adobe versus Airbnb. Airbnb rallied into the close. Adobe faded into the close. So we don't want anything to do with this unless we're looking to short it. So we'll move on. We'll pass on Adobe. Dane, would you sell puts on Airbnb or buy the stock? That's a very, very good question. Okay, so when you're entertaining, if you want to sell puts, if you definitely want the shares, meaning assigned to you, then fine, sell the puts. Just understand that if you go too close to the money, they will be assigned to you. But if you don't care about that, that's fine. Who cares? You got the shares at a discount. Um, but if you're looking to sell puts as a trade, meaning you really don't want the shares put to you, but you want to try to make money on selling the puts, that's a different story, right? Because then you want to sell premium that's expensive. So to answer that question, what we would need to do is go over to Airbnb, and we want to take a look at the current implied volatility. Or we can take a walk over to Tastyworks. We can take a look at the IV rank. Now, the IV rank, I like to sell premium on, meaning if I'm just doing options trades, I really don't want the stock. I just see expensive premium and I'm trying to generate cash flow. I'm looking for IV rank and an implied volatility rank of above 50, 40-ish, okay, but above 50 ideally. So as an options trade, Airbnb would not be attractive to me. However, if I want the shares, then that's fine. I would sell a near dated, where are we at here? A 122.78. You know, you could sell the March 3rd 122s, generate a credit, you know, between the midpoint, fairly tight markets in here, $2.51. I'm not sure if these are nickel increments or not, but some decent premium here. So I would be fine with that. If you want the shares, then fine. Sell premium near the money, and you're getting some decent premium where you're discounting your net basis cost on the trade. So I'd be fine with that, assuming you want the shares. If you don't want the shares, and you are doing this as a premium trade, not enough volatility in there for you. And if you want to buy the options, what I would do here is I would look to buy, let's say, a delta of, this is the call side here, say a 70 delta here. I would buy a in the money. We don't want to buy them front week or front month. We want to go out at least 50 days. Let's choose April. We want to, again, have a 70 delta, meaning for every dollar Airbnb moves, the call option moves 70 cents. So we have a 70. Here, we'll go with the 68 delta, close enough. That is the 115 call option. And then simultaneously, I would sell a call option to help offset the price of the trade. And you could generate, if you want to sell simultaneously, a 145 call option. That would generate cash flow to you of about, let's say, $1.93, $1.95 per contract. And that would discount your purchase of the call option, if that makes sense. So that's the way I would trade this. It's defined risk. You know exactly how much you're going to lose. Hopefully that answered your question. Okay. So Adobe, we're not going to want. Airbnb, we like. Amazon's been left for dead. This is looking interesting. We're near the lower band of support. Good volume into the close, rallied with the market. Stochastics are making higher lows, RSI making higher lows. So what you're seeing here is buying interest beginning to build on Amazon. Amazon, a maybe. We'll take note of that. Apple, interesting as well. Near the lower band of a downtrend channel. Good volume into the close. Stokes are rising. Interesting. Apple. Broadcom, 30-minute chart. A bit sloppy here. This is like a rounding top. Semis broke down last week. Good volume. I'm going to pass on this one. Boeing, a hot mess. We're going to pass on Boeing. BlackRock, banks broke down really hard last week. I'm not feeling it here. Take note. Equity market rallied into the close. BlackRock, a laggard, sold off into the close. That means that there's probably, hey, there he is, the man on a mission. Franklin, hey, brother. BlackRock, threatening a breakdown. I would not be a buyer of those shares. Chipotle, interesting. It didn't rally into the close hard, but we did rally off the lows. ADX is above 55, meaning that this sell-off is very long in the tooth. Let's take note of this one. We definitely don't want to see it break new lower lows, or I would just pass on it. And the name of the game with these trades, folks, is that if you're going to put them on, ideally you're putting them on late in the day. Because many times they'll get bid up, and then the final minutes of trade, we're starting to break out on Stokes. Traders will hammer it down again, and then you're a bag holder. We don't want that. Higher lows. So Chipotle is not my favorite yet, but it's improving. Coinbase. A lot of its competition is gone. I got to say, it's interesting. After the sell-off last week, a lot of these are going to be attractive. The key is on a daily chart, are we seeing a good setup? Are stochastics oversold and beginning to hook up or flattening out, or are they still declining? Meaning, is momentum still coming out of the shares? So we want to be cognizant of that, no doubt about it, and that'll definitely sway our opinion. CrowdStrike, strong. Relative to the rest of the equity market, CrowdStrike is held up fairly well. You can only buy this on a breakout, so I'm going to pass here. Disney, pass. Bear flag setup. DocuSign, 30-minute chart. Consolidating here. A lot of resistance up at 61. Too much resistance up at 61.50. Pass. Domino's Pizza got annihilated last week. When it's on an earnings trade, I like to avoid negative earnings trades for a while, getting long. Way too much volume to the downside. You're fighting Wall Street bigwigs. Your RSI is oversold, below 20. It can go a lot lower. It was a lot lower at 15. So I wouldn't buy it here. The oversold condition did not result in a significant rally worthy of you putting up this type of capital to enter the trade. So pass. Google, very interesting to me, the daily chart of Google. We've been talking about this one for a while. It's very, very weak. It did not really rally with the equity market on Friday into the close. I put a lot of emphasis on the quality of the close relative to the market, and it did not perform. So we're going to have to take a wait and see approach. We broke out above a secondary downtrend line. Maybe I shouldn't walk away from this one. All right, you know what? We're going to keep this one on. We're seeing higher lows. Still making daily lower lows, though, on price. But you're not getting lower daily lows on Stokes. You're starting to move up higher on a 30-minute time frame. Meta. I don't like this one. It reminds me of a dead cat bounce, just like this. Ultimately to fail, I would avoid. Microsoft. Not loving it. Pass. Moderna. I would never buy this stock, and I would only use options to short it. Too much headline risk here. Again, the reason why we'd want to use options is because we know exactly the maximum amount we could lose on that trade. But if you buy the common stock or you short the common stock, a headline comes out. If you short, it could rip your face off, or you have a headline risk about vaccine lawsuits or whatever, you'll get crushed. So I prefer to go with the options. And I would not sell premium on this. I would not sell premium. Sorry about that. Nike, 30-minute chart, avoid. Netflix, we were short, we covered. I'm not loving it. NVIDIA, we're looking to short this at 240 to 245. I would avoid. PayPal. In fact, we did short NVIDIA for a scalp post earnings on Thursday, I think. PayPal, not loving. Qualcomm, 30-minute view. Not loving it. Lower highs, lower lows. There are support levels below that need to get hit before we get involved with Qualcomm. This is one of the stocks that we liked last week, but it never hit our support level. We have alerts set up. Shopify, 30-minute view. All these charts look a lot alike. Dead cat bounce off of an oversold condition. You don't want to buy this. Never, ever buy this. Because all it is are shorts booking profits. What I have set down here is a third standard deviation Bollinger Band. Guys like me, we look to book profits just like we did with Netflix last week off of this third standard deviation Bollinger Band. Some amateur going in and buying the stock thinking that they're getting a bargain. And there's no way that it could go down more. No way. They talk themselves into it. And the other people are shorts, covering. They're booking profits. And the shares drift up only to massively disappoint by moving lower. You probably had shorts covering here that were reloading up here, getting ready for Monday morning. So I would avoid this. Actually, I just said we were short of Shopify. I was thinking Netflix. CRM, Salesforce.com. I think here what you need, you've already had a rally. You need a pullback and a higher low, as you do with all of these names in reality. Twilio, not loving it. Tesla. I think this is a dead cat bounce. And Tesla, of which we have a ratio spread on, or ratio strangle, meaning we sold naked puts and we sold naked calls, but we have a third more naked calls than we do naked puts, and we rolled those calls down. We booked about a 50% profit, rolled them down aggressively, and I think we're going to get lower lows here on Tesla. So if any, we're already short, so this would be a short to me. That does not mean that it will not rally with the market if the market does catch a bid. Walmart, it's already rallied. Avoid this. Zoom, interesting. Multi-day consolidation. Zoom is looking good. What do I mean by that? Here. Here's your cup. Resistance level number 2, or number 1, I should say. That's a primary. Make that. There we go. And here's your secondary downtrend channel, of which we have already broken out of. So we're building a base, and we're beginning to go from the upper left to the lower right to now from the lower left to the upper right of your screen. And that's when you want to start getting optimistic and start being bullish. What did I just do? Sorry about that. Zoom bouncing off of 50-day. Good point. We'll take a look at that. Thanks, Pedro. Let's go to the daily chart. As a matter of fact, we have our names, right? Airbnb, Amazon, Apple, Coinbase, Google, Zoom. So now let's bring up TrendSpider and identify opportunities or hazards. All right, so let's go to Zoom first because I think that's most interesting so far. Do I have the 50-day moving average up here? I'm not a huge moving average guy, but they do play a role. Let's get rid of this. Okay, let's go to indicators. Okay, so 50-day right down here. So yeah, Pedro is accurate. We bounced off of the 50-day moving average. Now, here's a problem. First of all, before we talk about the daily chart, where are we at? How do we close out the week? We continue to put in lower lows. But I like the setup. We're in a descending wedge formation. Our weekly stochastics are building a right side of the base, consistent with what we're seeing on price intraday. Daily view. I don't like the fact that we have a bit of resistance immediately above, but I think that on any pullback, that these shares could probably be bought. Let's go to the 30-minute chart. I think I have extended hours session on here. That's better. All right, so 30-minute chart looks really, really good here. And you can see that the automated trend lines, and folks, if you're not using TrendSpider, 35% discount code below. If you want to integrate artificial intelligence into your trading vis-a-vis identifying with a click of a button where support and resistance levels are, just like I'm doing right now. There you have it in green, lower band of support. This stock looks like it wants to go higher. Zoom, I think we could upvote to our list of stocks we're watching going into the new trading week. And we broke out of a downtrend channel. If by chance they retrace back down to support, I think that would be a good entry point. Now, this is one where, as an options trader, I would be interested in selling premium, to be honest with you, because I'm worried about the market. Possible option premium trade. Let's check it out. Yeah, this is a definite maybe. Yeah. IV rank of 42%. Interesting. So, hmm, yeah, premiums are nice in here. Using a probability analysis, if we wanted to sell, say, the 65 puts expiring next week, we could generate about a buck 35. You have a little over nickel wide spreads here, say a buck 35 per contract, and that expires next week. That's gamma risk. So if you go that close to the money, if you want less risk, go further out in time, 45 days, 30 days, and get further away from the closing price on Friday. And that way you're taking advantage of the theta decay. So Zoom looking very good as an IV trade. I would not buy the options here. They're too expensive. And if these shares begin to rally, the implied volatility comes out of those options and they get cheaper. Even if the stock goes up, it's those options are not going to increase in value as much as you would think because they're taking volatility out of the options. Ah, very valuable information. Zoom had no that's why the IV rank is so high. Okay. Very, very important information. I would not execute this trade in any way in front of earnings. Dane, interesting that the yields did not go over the 4 mark on Friday. I was expecting them to. Not sure if they made a higher high from the day before. They did make a higher high. They closed just off the highs of the week last week. Airbnb. Airbnb broke out. Again, the power of the automated trend line, folks. They broke out above resistance. Let's check out the weekly chart and how it closed. Beautiful. Beautiful. This is what I love, right? Breakout, pullback, retest of weekly support. Daily view. Oh, loving this. Loving this. Hating this. Stokes are trading down below the 50 mark. Actually, no, they're still above slightly. So this is a kind of a problem. But I don't know. I'm kind of liking this setup here on Airbnb. Options are cheap, very, very cheap. Only 7 percentile. Very low IV rank. 22 spot 6. I'm liking an options trade here. Defined risk, a bull call spread in all probability. Or if you want to buy the stock, you could sell covered calls, but the IV rank is so low, I'd rather go with the options trade. So Airbnb, we're going to upvote here. I didn't like Qualcomm, so pass on Qualcomm. Amazon. Go with the weekly view. It's a very weak stock. We tapped the VWAP last week, and we bounced. Daily view. We broke support, broke daily VWAP. Stokes are beginning to hook up. That doesn't mean we can't drift lower. I'm not loving this. I'm not feeling it. Nice breakout 30-minute time frame. Let's create an alert here. You know, it doesn't hurt to revisit it. Because what we could do is just enter on a retracement back down to this breakout point, and then just use a stop loss right below, either down below Friday's lows or immediately below the lows of support here at 99.21. So, you know, Amazon's a maybe. We may add that one. Apple. Closed right at the lows of the week. Stokes is still declining. I'm going to walk away from this one. Yeah. Going to walk away from this one. Apple off. Coinbase. Coinbase is consolidating very, very nicely here. So what we're looking at here is a higher low. You can see that we were watching this breakout, and it ultimately broke out. Let's remove this. Okay. So and here is our higher low. Weekly chart looks really, really good. Daily chart, we're at the lower band of support. Thirty-minute view. I think we need a retrace. I think we need a pullback here. I like Coinbase because of the weekly chart. I'm not loving the 30-minute chart. We need a higher low. I'm loving the Stokes. I think on any weakness on Monday, we could look to possibly buy coin. Big Pat. How you doing, Pat? Welcome. So Coinbase is due to the weekly chart, not so much the 30-minute chart. I'm going to throw this on here, unless I'll take it off if something is just wildly more attractive than Coinbase. You traded Square on earnings or post earnings? Congrats on the trade. Google. Okay. So, man, what a breakdown last week. And this is why you can't just use 30-minute charts. You need to understand where the stock is going. Is it in a downtrend? Is it in an uptrend? Is it breaking out? Is it breaking down? And this is a stock that a few weeks ago was breaking out, and ultimately it got resolved to the downside. Stokes are going in the wrong direction. Is there a trade to be had here? Quite possibly, but I think I need to see more of a sell-off. You know what? We're very close to getting resolved here, either to the downside or the upside on Google. If it breaks out, it could be a long. Excuse me. Let's go to a 30-minute chart. We're right at resistance. We maybe on a retrace back down to this lower band of support. That's my new puppy in the background there. Doesn't shut up, but he's a great dog. Uh, I like to make notes to myself. All right, so Google maybe. We'll throw that on here, and I think that wraps us up. So we're going into the new trading week, watching Alphabet, Coinbase, Zoom, Airbnb. Thank you, Pedro. Zoom reports on Monday. I would not trade this stock before earnings. Congrats, Pat. Good for you. Dane, if you have a sec, I bought BA shares at 190. Do I sell covered calls to protect, or do I sell the shares and get out and buy if and when the shares go lower? Okay, so what we do is in technical analysis, it's all about probabilities, right? I don't have any idea. You have a lot of technicians out there that look at a chart and they say, this is what's going to happen tomorrow. I don't have any idea. I could tell you the probability. Could be a very strong probability. So with that said, let's take a look at it. Yeah. This is a 30-minute chart. Let's go macro first. Now, where we're at in this cycle is that Boeing has hit stiff resistance at 219 and change. So the question is this rally over? I don't think so. I think that what you have here is a rally off the lows, right? That is due for a pullback. Now, I'm loving this 178 mark on a pullback. Now, what I'm going to do here is I'm going to overlay on the weekly chart, monthly support and resistance. And here's that 178 mark on the monthly chart that we just talked about. This is the automated trend lines. This is the value of AI with your charting. So it looks as though, in all probability, we are going to make lower lows on the week. Stochastics are rolling over. If you have profits in this trade, there's nothing wrong with making at least some of those profits real, playing with the house money, or if you're selling covered calls, you got to get paid for your risk. So what kind of premiums are you going to get paid? Probably not much. Yeah, very, very cheap options. Now the thing is with if you sell a cheap covered call, that's all well and good. You're still putting money in your pocket. But what if the stock gets stronger, right? And you want to buy those calls back? Well, what happens is something called call skew, meaning while the value of the option overall, the implied volatility may not increase, there may be call skew. The calls may get overvalued because people want them. They want to buy the calls because they think the stock is going to go up. So for you to buy back those calls, it means that there's going to be a lot of opportunity for IV expansion or increased call skew. And to buy them back, if you want to stay net long of the stock and get rid of those covered calls, it may get expensive if you're buying them back on strength, which most people do. They buy them back on strength. So where do we go to from here? Let's take a look at 194. We closed at 198. We went over this earlier. I don't, if memory serves me, I did not like, I do not like this chart. I think that you could get the shares. You could get the shares at a better price. Especially if you just bought these shares and now you're sitting with a loss, I would not be a seller of covered calls here. I would accept the loss and wait for a better setup on the shares. And I think it's going to come. I don't think it's a bad setup. I think that it's come a long way. Back to the monthly chart. It's come a long way, and it needs a pullback, a retracement. But that retracement may take it all the way back down to 181 or 178. That makes the most sense. So I would rather take the hit on the share price right now and buy them back at a cheaper price. And the rule that you may want to use is if we make a new monthly lower low into March, or if we make a new weekly lower low into next week, you commit to yourself that off the bat, right away, out. Don't wait until later in the week and a lot of the damage is done. Decide on what you're going to do over the weekend. That way you have peace of mind going into the new trading week, which is why we do the week ahead commentary, to strategize when the markets aren't open. We know pretty much what we're going to do, what our attitude is towards the market going into Monday already. We're not trying to decide on Monday morning when everything's going fast and furious. So I think that in all probability, these shares are going to make lower lows. That's the setup here. Is it a broken stock? No. I think that it's going to pull back, probably put in a higher low, and then proceed up higher. But the Dow Jones closed down horribly last week. I don't know if the Boeing is a Dow component. I think it probably is. And as goes the major index, probably so goes the individual stock. So be careful here. I would not be a seller of covered calls if you believe the stock is going to go down longer term. If it's a stock that's got fairly good IV ranking, it's still in an uptrend, but you're entering into a consolidation range, then yeah, sure, sell some covered calls. That's fine. But when you think the stock is going to have a significant pullback, I would rather move to the sidelines, have presence of mind, not worried about having to roll down the calls or do anything like that, I would just get out. I would get out because I think that if we get a new monthly lower low, as we're seeing probably set up on the Dow Jones, Boeing's going to follow along with it. And you're going to see these support levels ultimately get hit. One, I'll share this with you so you have it. You're welcome, Franklin. Have an awesome weekend, my friend. But it is broken market until we get to 5.5 on the 10-year or Fed funds rate. You talking about, Franklin? I mean, Patrick. And that's pretty much it, folks. I'll wait for Patrick's reply so I don't cut him off. And folks, as I'm waiting for Patrick's reply, we have a 14-day free trial offer. Please check us out. If you like TrendSpider, we give it away free. We're no longer doing business with Trading Sim. Nothing against them. We just parted ways, but we're still doing a lot of business with TrendSpider. We give it away free with our silver and gold level memberships. We give discounts for yearly. And TrendSpider, if you're not ready to do business with me, that's fine. Go over to their website, at least use them. Check out their website, link below, 35% discount code, AI with your charting software, and you get a lot of functionality here, folks. Yeah, Patrick, that's the problem. I don't agree with that per se. I think that if we get to 5.5%, you're going to see at least the high beta names in free fall. And then we got to worry about the yield curve and the yield curve steepening. Once that begins to steepen, that's when I get very, very worried about this market and it breaking down. So I want to agree with you on that, but you're using logic. And unfortunately, this is an illogical market. Once that yield curve begins to steepen and go positive back above zero, that means that the Federal Reserve is back to cutting rates because there's something very, very bad happening out there. And we want to be short of equities. And that is what our end goal is here, is to maximize our profitability on that ultimate steepening of the yield curve and the breakdown in the equity market, and the beginning of which I think that you saw last week. Lots of technical damage last week. Folks, have an awesome remainder of your weekend. We will be going live, Sunday Night Futures Live. See you there, 6 p.m. Eastern Standard Time, every Sunday and every Thursday. Talk to you then. Have an awesome remainder of your weekend, and I will talk to you tomorrow night. Be well.